to a special Halloween edition of This Week in Real Estate. That's so stupid. What's up, everyone? Welcome to This Week in Real Estate. This is episode 294. Wow, we're almost at 300, guys. We're broadcasting live everywhere from Clubhouse to YouTube, Facebook, Instagram, Twitch, LinkedIn. We're literally on everything. And today is a very special Halloween episode, as you guys can tell by my wonderful costume. I don't know if you can tell what I am. Can you tell what I am? Maybe? Okay. For the audio listeners and podcasts, I am a pumpkin. This was actually, the pumpkin was the first costume I ever remember wearing. But I want to bring up some special guests that I have for me this week. First, the one and only Tim Macy. What's up, Tim?
Dude, when you said one and only, I assumed you were calling somebody else up. Yeah.
I should have. But no, no, you guys, welcome Tim to the show. Tim, what are you dressed up as today?
I'm dressed up as a shirt and tie real estate agent. I wear a tie twice a year. The T-Wire Halloween episode being one of my times.
When's the other time you wear a tie?
There's usually a wedding in there somewhere that I have to wear a tie to.
I know this is the costume, Tim, because I don't know if Tim actually does real estate anymore. So welcome to the show, Tim. Thanks for joining us. What, is that a cane in the background? Do you have a cane also?
No.
Other way.
We're cleaning up the office, all right? We're cleaning up the office.
Okay, he's got he looks like he's in a prison cell right now, but
yes.
Thanks for joining, Tim. And I also have one of my two newest co-hosts for a new podcast that I've talked about it before, but maybe you don't know about it. Please welcome Becca Daniels. What's up, Becca? Yay!
Call me better because I'm on a roll.
Becca and I are two of the three hosts for a new podcast called Real Random with Rick, Ray, and Rebecca. It's very RE, but it's been fun.
Yeah.
One of our guests was the Tim Macy, actually. And your camera's jumping around all wild and stuff. But hey, welcome to the show.
Thanance. I may have to reset it really quick. Sorry.
It's fine. It's
I'll
fine.
be back.
No, that's
while
her,
you're glitching,
that's her costume.
Yeah, I was supposed to say that it kind of adds to the flair of the costume. Tell people what you are, Becca, or should we leave it for the comments?
I want to leave it for the comments, and then I'll just pick the one that I like the most.
Nice.
All right, listen. I don't want to be offensive.
Well, I mean, you can be here, but
Yeah.
I was going to say
fair housing. Okay.
It's just with the camera glitches. It makes me feel like she's your future AI girlfriend.
Oh,
that's pretty good. You could be her.
That's the vibes I'm getting. Yeah, her.
Yeah, she is her. Elizabeth Nightingale tried to join us today. Unfortunately, the internet connection just did not play nice. But she said that Tim looks like Men in Black or Lady Gaga. No, wait. She's saying Rebecca looks like Lady Gaga, maybe. Mm-hmm. Or maybe Tim. Tim can pull off the Lady Gaga. It does look kind of cool with the glitch. I'm not playing, but it's probably you may have to reset your camera, which is fun.
Yeah.
You could do that as I get into the first article, because we do have a lot of stuff to talk about today. This is episode 294, broadcast live Wednesday, October 30th, Halloween Eve, 2024. A haunting housing market. I've always wanted to be a voice actor. I think that would be fun.
You are a voice actor.
It would be really fun. Especially being the evil guy. I'll get you, Gadget. You know, that guy. That would be a fun guy.
You've been hired for voice work. You are a voice actor.
That is true. I have done
Have
some
you been
voice
hired
work.
for voice work?
Yeah, a couple of
Yeah,
times.
it's a guy with a podcast hired him to do the intro.
Yeah.
Oh.
It's probably one of the best podcasts in the world that I got off the ground by being one of the first guests, and the guy just kind of phased out. He just never did it much with it.
It's me, Becca. It's me. He's talking about my podcast. Yeah.
It was his
That's
podcast.
hilarious.
With all the AI knowledge that AI girlfriend has, she still couldn't compute that one.
That was
She just had that
funny
face.
watching her try to compute that one.
You know,
I was like, who we trashing right now? Poor guy.
He was here the whole time.
Listen, it's 10 a.m. here. That's early, right?
It is 10 a.m. I forget that you're 2 hours behind.
all right,
Because you were
right.
originally in Florida,
Let's-
right? And now did you tell people where you were? What market are you in?
Oh, I didn't tell them anything about me.
Yeah,
No.
tell people. Take a second, both of you. Tell people where you guys are from.
So I'm in the Seattle, Tacoma area, Washington State, over on the West Coast. Some call it the best coast, but I'm originally from Orlando,
Does
Florida.
anyone actually call it that? I don't think so.
I like it better than Orlando. Sorry, Florida. I still.
Oh,
still have a place
wow.
in my heart, though.
Oof.
What's it called? The PNW? Is that what y'all call
the
yourselves?
Pacific Northwest. Yeah.
There you go.
Yeah.
All right, Timmy, where are you now?
So most people know me from San Antonio, which we lived for the last 12 years. And we just recently relocated back home in southeastern Connecticut, so Mystic, Connecticut. And that's where I'm at now. We opened up a little office here. We got a little team. I didn't catch that one.
This ain't Texas. You didn't hear that?
Oh, this ain't Texas.
Yeah.
It is definitely.
You need to
not.
add that to your soundboard because that's. I feel like you should be
That
using
would be a good
a lot.
one. Yeah, for sure. No, so Mystic, Connecticut, it's awesome. We just opened up a little office here. I got meeting an agent here in like 30 minutes, and we've got a little team here. So it's fun to completely start over, which is what we're doing up here. So yeah, it's gonna
Fun
be
times.
fun.
Well, I want to jump right into it. First, let me mention Scap. What's It Worth Appraisals is his YouTube. He said that Tim looks like a high-end Matt LaMarche.
Is that a compliment? I don't.
I know, right?
Yeah.
And Matt was first in the comments, by the way, today. So congrats, Matt. But I can't replay those comments that happened before the show for whatever reason. Restream changed their stuff. Okay, let me share my screen and we will jump right into the news. And no audio. Here we are. I am a professional.
This is
All right,
which episode?
I know, right? 294, believe it or not. And it's still not any better. All right, the CMLS urges NAR to keep clear cooperation in a new letter. They wrote the letter. They're wanting to keep clear cooperation in. Man, professional. With the fate of the National Association of Realtors clear cooperation policy hanging in the balance, the Council of Multiple Listing Service has joined the growing cohort of industry leaders urging NAR to uphold the rule. The debate over the NAR's clear cooperation policy is intense and complex. The CMLS CEO, Dene, Denee, D-E-N-E-E, Denee.
I'm gonna say Dene. I'm going with Dene.
Denee, you're going Denee, but it doesn't have the little thing above the E. Oh, that would
That'd
be
be
like
Swapped
a
out
Denee.
if you swapped out the D with an R, we'd be at Renee.
Oh, it would be
right?
Renee, wouldn't it? Okay. So
Yep,
Danae
that's what I'm going
Evans
with.
said in a open letter Friday afternoon, our position is measured and simple. CCP should remain in place. Modification should preserve the spirit and effect of the policy, and the CMLS Board of Directors has arrived at this conclusion after careful consideration of the objectives to the CCP. We're not talking about China.
All right.
Every time I see CCP, especially during election season, I'm like, what? Let's see. They go on to say, we do not believe many of these concerns are inherently valid, but none of them alone or in aggregate merit the removal or significant weakening of the policy so crucial for the integrity of our housing market. All right, we've talked about this several times. I want to talk about it with you guys because I don't feel like the clear cooperation policy did anything at all. So for those of you who are new to the conversation, the clear cooperation policy simply says that once a real estate agent has a listing, they have to enter that listing into the MLS within 24 hours. Some areas vary. They have a coming soon status that you could put it in the MLS, but then list it as coming soon. Some do not. But what it did was it took away a real estate agent's ability to list a property and never put it on the market and sell it off market by double ending the deal. Supposedly. That's actually not what it did at all. Because they allow brokerage exclusives, and a real estate agent could still take a listing, never list it, and double end it themselves. So I don't think the Clear Cooperation did anything at all. And I keep asking people, like, what am I missing? And no one has been able to tell me that I'm missing anything in this. So I think this is a huge waste of time and they should just get rid of it. What do you say?
So in Washington state, we are not allowed to do any sort of like 24 hours ahead of time or a week or any sort of coming soon marketing. It's just, you can't talk about your listing until it's actually live on the MLS. I don't really like that because in Florida, we did have a 24-hour period that we were allowed to do some more marketing. And I felt like that generated more buzz and more interest in the property, having a little bit of that coming soon marketing. And it allowed us to have more people come into the open house on the weekends. It got more people through the door, got more traffic for that first weekend, which allowed my sellers to have more peace of mind because their house got off the market faster versus waiting for it to pick up traction, to get over onto all of the websites and to start generating some buzz. It's difficult to have a fast sale when you're not allowed to do anything to pre-market the property. And I don't think that's to the benefit of every single seller.
Yeah, I would agree with that too, Tim.
I think a lot of the lawsuit stuff comes from this idea that the boards, NAR, real estate agents are conspiring to build this system that you have to use, right? Like they make it very difficult to not use this system we have. And when you look at Clear Cooperation, the liability side of it, in my opinion, is that this is literally a policy put in place that says, hey, you can't take a listing without using the MLS, right? And so I think I think there's a lot of liability for the industry at large with Clear Cooperation. I'm not a lawyer, my legal background, it's very little, but I think legally from the industry standpoint, it's a liability. I think anytime, a board tries to get between a seller and their agent of how they're going to market the property, like I think you're always running into problems, right? Like seller says, I want you to put a sign in the yard and start marketing the house before we list it because we're not moving for 60 days and I got to clean the place up and whatever. And I'm like, no, our board rules don't allow us to do that. The seller's like, what's up with your stupid board rules? Like you can't tell a seller how to market their property. And the big piece is this. Every comment section I look at is a bunch of people complaining that the only people that want to do away with Clear Cooperation are people that want to double side deals and make more money. And it's like, that's just a bad argument. It's a bad argument to say we're putting this rule in place because some people do bad things. Right? You can't stop all like agents from marketing a property the way they want to, the way their seller wants to, just because you think agents are going to do bad things. And to me, it's just an old school, like it's kind of laughable that this was the newsworthy thing. Like, big surprise, the leader of an MLS wants to keep this policy in place that forces you to use the MLS. It's like exactly. Democrats supporting Kamala, like obviously.
Well, I mean,
we're not going politics. We're not going politics. I'm just saying.
That's also iffy. It doesn't surprise me that they're coming out for it. It does surprise me that people are still holding on to this rule that doesn't, in fact, help the thing that they are trying to prevent. Because I can still list a property and double end a deal.
Yeah.
And I do think they could do modifications, which I don't mind what she said. I just think it's funny the position from which she said it from. She said the concerns aren't invalid, but we can make modifications and changes to the rule. We don't have to get rid of it. Like, I agree. Like, make some modifications, because for Rebecca not to be able to market a house until it goes live is ridiculous. And that's another lawsuit waiting to happen from sellers.
Well, the key is it's taking away seller choice. So the seller may say, hey, this would be the biggest benefit to me, but we're like, we can't do that. And I don't think that that's really fair to the client. And that's who we're supposed to be protecting through all of this, right? Is we're supposed to be making things better for all of the consumers. But really, it just seems like it's supposed to be penalizing some agents. Like, we just don't want you to double end a deal versus what's best for your client and their specific unique situation.
That's what Real Estate ER says. So this is interesting. Real Estate ER says it also hurt marketing agreements between the agent and seller. They go on to say sellers hire agents to market their home. they don't hire agents to abide by an arbitrary set of rules made up by a third party. And I don't know if you, for longtime listeners, you'll remember the Couch Gang. Does anyone, do you know what the Couch Gang is, Tim? Have you seen that episode? The Couch Game.
Sounds like a different series, but keep going.
It was a group of people that jumped on our live podcast back when Facebook was rocking out and we were getting like thousands of viewers on Facebook because they weren't penalizing people that didn't pay. When that was happening, we had this group of people that said, hey, I'm here to buy the couch. Are you guys selling the couch? And there were all these comments about people that were like, saw your ad on Craigslist. I'm here to buy the couch. And they're called the Couch Gang. And they joined the show. And Dan and I at the time, we're like finding couches for them and looking up couches while doing the real estate news. Then we got invited to the Couch Gang, which is a Facebook group. And we got to see that they were like, these guys are awesome. They're actually playing into it. And then the others were like, yeah, let's move on to someone else and try to harass them. But the chair in the avatar of real-estate-er reminded me of the Couch Gang. So that's why I was calling you out. Noel Nielsen, speaking of calling you out, says, wait a second, who is Tim Macy supposed to be?
Brad McCallum.
Jay Marks says, Tim in a suit, he is me for Halloween.
Or Jay Marks.
Yeah, Jay Marks, that's true. Even in Jay Marks' avatar, you kind of favor a little bit. He's got that bluish tie as well, and the white shirt and the black. Yeah, there you go.
Is this it? Wait,
yeah, that's it. You need some glasses.
Okay, I'll get some glasses. Hey, last thought for me anyways. Everybody else probably has thoughts on clear cooperation, which is I forgot it because you went to the my last thought is this. I think it's kind of interesting if an agent just went hard and did all the things that they should do, right? And just went hard on throwing the stupid rules out the window. And then when the board came after them, they went and sued the board because they have a fiduciary duty to their seller. And again, like I would rather an agent sue a board and go through all that stuff before there's some massive class action lawsuit with a seller.
Yeah, that's coming.
You should tell the agent that you're talking to in a little bit to do that, and then let us know how it goes.
It'd be interesting if some other person did it. Yeah.
That's too funny. All right, let's go to the next article because it does have a little bit to do with the legal realm. This was on Broke Agent Media. It was also posted on Inman. The Realtor Workarounds and attorney's fees called out in NAR settlement objection. So anyone that was a part of the settlement can file a settlement objection, and this is what Tanya Monestier decided to do. Now, if her name sounds familiar, that is because she is like a professor, a law professor at University of Buffalo. And we have talked about her before in the context of her saying, like she was reviewing the agreements, the buyer broker agreements, and she was giving her own opinion about the buyer broker agreements. And she wrote a buyer broker agreement that we took on this show and basically,
ripped it up.
Went through line. Yeah, we ripped it apart. So she's now filing an objection in a 136-page filing. University of Buffalo law professor Tanya Monestier has stepped forward as a home seller objecting to the settlement agreed to by the National Association of Realtors. While this case is set for final approval November 26th, she argues that the settlement not only falls short but leaves customers in a worse position. She says that it's the worst of all possible worlds. She says that she believes it obscures the original intent with the paperwork and legal jargon and logistical chaos. She said that it reinforces the existing structure of inflated seller-paid commissions with Realtor Workarounds. And she says in her introduction, I'm a member of the settlement class, Burnett versus National Association of Realtors, filing this objection to urge you to disapprove the settlement reached by plaintiffs and defendants and to reject the plaintiff's application for approximately $333 million in attorney's fees.
Yeah, make sure you count up all those zeros.
$333 million of attorney's fees from the plaintiffs. That's wild. I love that she's objecting to the settlement and she's objecting to the attorney's fees.
She's objecting to everything. She just is not happy.
She's not happy about it. It's interesting. She said the settlement fails to provide meaningful decoupling and continues to facilitate steering, thereby holding sellers like me to industry norms of paying both sell side and buy side commissions. So in your experience so far, now go to nowbam.com for a full breakdown. It's got a 1, 2, 3, 4, 5, 6 points. We won't go over all of them, but then she talks about the 7 industry workarounds and how people are, amending the buyer representation agreement to enable the broker to receive additional compensation that was offered by the seller, asking the buyer to agree to seller paid bonuses, using touring or showing agreements that are later supplemented by full buyer reps, including provisions to guarantee minimum level of compensation, buyer brokers waiving their commission. Why would that be bad? But okay. Using provisions to imply the agent will accept any compensation offered by the cooperating broker, or tailoring the buyer representation agreement to match the seller to offer compensation. She said these workarounds, which we've all seen. I think have you seen? I've seen all of these so far. She said that these workarounds are not with the intent of the lawsuit. So 2 questions. 1, does she have a point? Did the settlement fix things for buyers and sellers, or did the settlement make it worse?
I don't know what her point is, honestly, because things were put into place that help protect buyers, that I think help clarify what commissions will be and everything. I think the decoupling is a good thing. It's something that the Northwest and MLS did back in 2019. So we've been operating with this for a while, and sellers have a choice of, do you want to offer compensation or not? You don't have to offer compensation to a buyer agent. I don't know what the problem is with all the different workarounds. Does she just not want buyers to have representation? Is that really what it comes down to? Because that's what it seems like.
You know what? One thing is missing from her workarounds that we have seen here, which I think is not in good taste, and we don't do it because I've told brokerages, like, this is not what was intended by the settlement. But you have brokerages that are kind of behind the scenes negotiating their commissions and then getting a separate document that's not a state form or anything. It's not required, but they're getting a separate document signed, separate from the real estate agreement, separate from the contract, separate from the offer, that says, here is what the seller or listing brokerage is offering, and then this is what will be paid to that agent. And in some cases, the buyer's signature is not on those sheets. So in other words, it's the exact same thing that was happening. It's just on a per listing basis. And these forms have been presented to me to say, hey, this is to confirm the seller paid commissions, and I'm like, no, just put it in the contract, because that's the piece of paper that we need that confirms how much you're going to get paid. And they're like, well, I don't want it in the contract. Why wouldn't you want it in the contract? You wouldn't want it in the contract because you don't want your client to see that they're paying you by the offer. So that's one weird workaround. I would say that's number 8 on here that she hasn't said. But Tim, what about you? Do you think we're in a better position, worse position?
Well, the piece that I like is the fact that she's calling out the $333 million. So that's kudos to her. Good job. I was waiting for somebody to do that. I don't disagree with some of this stuff. The thing that I don't like is in that article, she states that commissions haven't gone down. And it's like, look, that was never the point. The point was to make a free market of commissions, not pull it down, bring more transparency to commissions, not bring them down. And so it just comes from this idea that commissions should go down. And I don't think that's I don't agree with that statement. I personally think they probably will. I think that we'll see some compression over a couple of years, but that's not the point. The point is a free market of commissions, not pulling them down.
Here's the thing. She is, as a seller, she's allowed to pay whatever commission she wants to pay to whatever agent she wants to work with. Now, that agent may not choose to work with her if she's not willing to pay the commission that they prefer, if they're not able to come to terms, but that's her choice. She doesn't have to pay a buyer agent. She doesn't have to pay a seller's agent. She can list her house on her own if she wants. She has that freedom. I don't know why everybody has to abide by whatever idea she's come up with in her brain.
And I will say,
she knows more than everyone because she's a law professor. So she teaches attorneys, so she knows more.
I fear for our future attorneys.
In defense of her viewpoint and everything, Like we've had conversations with agents, Ray, you just brought that up. Like we don't have understanding across the industry. So we are still definitely running into problems where sellers don't understand that they don't have to offer it. They don't understand.
Yeah.
Like you can put it in some super wordy legal form, but at the end of the day, there are a lot of agents saying, hey, you have to offer buyer agent commission or else nobody's going to come see your house. Like we do have a lot of educational work to get done as agents that I'm not seeing get done at really many companies.
We have been educating agents one offer at a time. That's how we've been educating agents. And they'll say, how much is your client offering? I'm like, they're not offering anything. Just if your buyer needs that commission paid, just stick it in the contract. Well, I'm not going to show your home if you don't offer commission. I was like, no, they'll pay your full commission. Although you said they weren't offering. Well, it depends on the offer. So if I put a 10% commission in that offer, your seller's going to pay it? Yeah, depending on the offer.
Offer 10% over list price with a 10% commission.
Yeah. If you offer $500K on a $300,000 home, yeah, they're going to pay you 10%, bro. They're good with that. So I just don't understand why I do understand what the animosity is. The animosity comes from agents that can't by themselves prove their worth or prove their value. And because they can't prove that value, they can't then claim to their client, I am worth it for you to pay me whatever percent because these are the services I offer. This is what I do to help you. And because they can't clearly communicate their value, their clients are saying, well, why should we pay you? Why should we use you? And then they're stuck. So the only thing they have to say is, well, you won't have to pay me. I'll get the seller to pay me.
I think that, previously taking commission out of MLS to a lot of people didn't seem like a big deal. It's like, that's it. You're just going to take it out of MLS. That's the only change. But what it got rid of was this unilateral offer of compensation, which was me seller saying, hey, this is what I'm offering. And you buyer's agent just getting stuck with whatever that offer was. I mean, how many times did you make more than what was offered on MLS? Almost never. And it's just a big change in how things work. But this idea that you no longer have this unilateral offer of compensation is what agents, I think, need to do a better job of understanding. And Ray, you bring up a good point. You can be a 4% buyer's agent all day. You can be a 5% buyer's agent. You can be a $5,000 buyer's agent. You can be whatever you want instead of simply being held to whatever that unilateral offer previously was in MLS.
Mm-hmm.
Yeah. Courtney living in Columbia, South Carolina says, it's Courtney. What area of the law does she teach? That's what I'm curious about. First foray into real estate law. So it could be something about real estate law. You guys will also be happy to find out that this is not just her coming in. She decided to have a Zoom call with the DOJ and bring them into the mix too, letting them know about the workarounds and what's happening. I kind of love that the workarounds are being pointed out because we play fair and we play by the rule. And if there are all of these workarounds that real estate agents are trying, it is a little bit, it messes up the market. So I hope those workarounds do leave, but I don't mind a situation in which somebody just asks for their compensation in the offer. That's totally fine. Because we've always had buyer brokerage agreements with our clients. So we've always told our clients, here's how much you're going to pay us. The seller may cover part or partial or all of this amount. And if they do, great. If not, you're going to owe us the rest of it. And that's not been a problem for me since 2007. So I think a lot of agents haven't learned how to do that. They don't know that skill yet. And that's who's going to go hungry. Mm-hmm. Then Noel Nelson says, Ray explaining the law in a pumpkin suit. Perfection. Hey, Noel, somebody that knows the law. Okay.
Yeah, you definitely got the wrong guest on. You should have had Noel on.
I know. All right, let's quickly go to the next article too. This one is interesting because it talks about the buyer and seller expectations. Oh, I just see your text, Tim. Do you want to hit that? Did you have time to read that article, Tim?
Oh, yeah. I'm very familiar.
Okay. All right. So Tim, I want you to give us a breakdown on this one. This one I couldn't cover because for whatever reason, for me, the article was behind a paywall, but for Tim was able to see it and read it for free. And trust me, if anyone should have been charged for that, it should have been Tim. So, so Tim, there's a new announcement about EXP's rev share model and how it's changing. I'm assuming they made this announcement at their EXP conference that's going on right now, which they also announced that people get Canva Pro and Sisu, which are both third-party services. What was the big announcement on the rev share side?
So one, we have a lot of rev share companies in the industry now, and everybody's model is a little bit different, and the numbers tweak a little bit differently. EXP has been the one that has had their rev share model the longest, and they are the biggest at 80,000 some odd agents. And so now we're seeing them change their rev share model, and so everybody else is coming out with what they come out with, and they're growing. But now EXP is at this point where they're feeling like they need to change it, and it's interesting. I don't know about you, Ray, but as someone who's like built a rev share business and seen other people do it, like changes are interesting. Changes make me wonder if more changes are going to happen. And it essentially redistributes rev share because every rev share company has a cap on how much gets paid out. And so at EXP, 50% of the company dollar gets paid out. At LPT, 50% of the company dollar gets paid out. At Real, it's 60%. And so essentially there's this rev share pool that gets paid out every month, and it gets capped out. So the company doesn't pay out too much of it. So any rev share changes they make are essentially redistributing the rev share. And it's interesting at EXP because they're redistributing it to like newer agents who haven't brought on as many people, to capping agents, and to their icon agents. And so what this is a win for a lot of agents at EXP who hit icon agent and who are capping, because it brings more revenue share to them. It's going to be interesting though, because it definitely takes from other agents who maybe have already built a big organization. So it's a redistribution, a pretty massive one if you read into the numbers. And I'm interested to see how it plays out over the next couple of months.
Do you know it well enough to tell me like exactly how it's different from what they're currently doing? I know it's brand new news, so I don't know if you've had time to really dive in.
If you're into, if you've looked at rev share models, there's bringing agents on to an organization, and then there's unlocking tiers. So you can bring a bunch of agents over, but if you don't unlock tiers, you don't make any money. And so what it does is it unlocks more tiers for people that cap, and it unlocks more tiers for people that hit icon agent. And they just unlocked a bunch of tiers for if you join EXP, I think you automatically have 3 tiers unlocked already. And so they're going very heavy on
gotcha.
Trying to entice new agents and trying to entice producing agents with rev share.
Yeah, it seems like a heavy rev share move.
Yeah, and I mean, look, I as a real agent, I don't love when people incorrectly speak about things that we do and changes we make. So if there's anybody at EXP that can correct me on anything, but it does look like a shift from taking from some of those rev share orgs and redistributing it to new agents and agents that are, selling and producing more.
Interesting. Okay. Well, we'll see what happens. Let's see. Let me throw up this next article. Oh, I just froze. I froze. Am I frozen? All right, now I'm unfrozen. Good. Everything on my screen just froze for a second there, and I'm not sure what happened. So, all right, let me talk about this next one, how to meet buyer and seller expectations in 2025. There's a new report from Zillow that came out that talked about the 2025 Zillow Consumer Trends Report. You guys can go to nowbam.com and find it there. It's also on the Zillow website as well. There's 3 takeaways that they mention on BAM: what home sellers want in a real estate agent, a positive reputation, online reviews, and being part of a team. I thought that was interesting, being part of a team. I think that's kind of new to the game here. Mm-hmm. Number 2, what buyers want from a real estate agent. More than half, 58%, said the most important thing they want from a real estate agent is guidance on crafting the right offer. 46% said they want to prioritize help finding homes that fit their needs, and buyers want their agents to help them find the right home for them and negotiate the deal, basically. Let's see, what was there a third one on there? No, then they give you tips on these too. I'm just going through the high points that Broke Agent Media pointed out. And then buyers and sellers interviewing agents. This was, I guess it's Tom Toole's third takeaway. His third takeaway was that buyers and sellers decide which agents to hire. Zillow's report shows that while buyers and sellers do interview agents, many still choose the first they speak with, though this trend has slightly declined. So for home buyers, 49% hire the first agent they contacted, 40% of first-time home buyers, 52% of repeat buyers. I thought, usually like a first-time home buyer would interview more, but no, 52%. 52% of repeat buyers. I thought they would have more experience and would be like, yeah, let's interview multiple people now, but no. On the seller side, 59% chose the first agent they interviewed. Ooh. The other thing you want to think about here is the numbers used to be over 70%. Okay. Yeah, that's a big change. On the actual report, let me go back to the Zillow page here. So here's the actual report. It's a big PDF of a whole bunch of stuff. Nearly all buyers think sellers work with agents. Nearly all buyers and sellers work with agents. Sorry, misspoke there. Buyers and sellers hire the first agent they contact. Digital tools benefit both agents and clients. Buyers want to text agents. Oh, hallelujah. Don't call me. I mean, it's just so many calls. Text are so much faster. Listing agents have the opportunity to set expectations with sellers. Most clients find agent commissions fair. That's an interesting insight. Given all this talk about the lawsuit and everything, you would think that's not accurate. They go over some year-over-year changes and stuff like that. But I just wanted to ask you guys fairly quickly, because this report is huge. We'll probably be talking about it again on the show as more people kind of dive in and point out some stats. I don't know if you've had time to look at it or read it, but what do you think some of the biggest changes from 2024 to 2025 will be in working with both buyers and sellers?
Well, one stat I liked, and then I got to jump after this one. One stat I liked was that people do want to work with a team, and I say that because I work with a lot of solo agents that are like, no, Tim, you don't get it. People want to work with me. They want me all the time. And I think that's in their head. I think most of the time it's how we position our team. And I don't want you to think when I say team, a team leader and 20 agents. No, I'm talking about a team leader who has a TC, who has an assistant that maybe has a showing partner. When you position it the right way, people feel much more comfortable knowing you have somebody that does your marketing, and like, they're talking about the biggest investment of their life. They're talking about selling their biggest investment. They don't actually want to work with a one-man band. That's not actually the thing.
Yeah.
And so I thought that interesting because that's how I've always felt. And so it's kind of funny to see it play out on the statistics. But that's it for Halloween episode. Love you guys. Bye, and I'll see you later.
See you later, Paul. I want to show this one. Let me throw this one up here. View tab, streamline. That's not it. This was one of my most interesting stats. How an agent's social media activity impacted the changes a prospective buyer would hire them. Chances a prospective buyer would hire them. 10% said it made the buyer less likely to hire the agent. 46% said no impact. 44% said it made them more likely to hire. I just thought that was an interesting stat. So guys, be aware of what you're putting online. Don't just like jump on and do a live stream in a pumpkin suit like some idiot. Because your clients are out there going, this guy. Don't post what?
Dating stories.
Yeah, there you go. Don't post dating stories.
Now, honestly,
especially if you were going to date the client.
I wouldn't be surprised if in 2026, we see that number shift from no impact to having more of an impact.
Yeah, I would agree with that. I think that's going to continue to go up.
Mm-hmm.
Let's see, ranked among, I guess, what was the total on that? Let's see, 54% total said there was some impact, 10% negative, 44% positive. Mm-hmm. In the chat, I have to point this out. Matt and Scap are using our chat instead of text. They're just using our chat to create their golf plans. Thanks, guys. Mm-hmm. I'm glad y'all could use the chat for something productive. It's ridiculous. What's up, Cindy? I see you there. Ranked among the top 3 most valuable agent services. 58% said it helped me decide the details of the offer. 56% said it organized and submitted paperwork. 46% said identified homes. 44% led contract negotiations. 42% took me to private home tours, off-market properties. Or is that private, like, come with me, get in my car?
I think it's more of a let's go look at houses versus go look at a bunch of open houses and tell me which one you want.
Yeah, I could see that. Let's see. And we have 27% referred me to a lender, 27% to an inspector. I mean, we refer everyone to our list because our list is good. They're clients that they're vendors that our clients have had really great experiences with. And I always say that it's really easy to get kicked off of our list, but very hard to get on our list. This was interesting too. How do buyers prefer to communicate? Text messaging and messaging apps. 59% of Gen Z, 53% of millennial, 57% of X, boomers, 42. So 53% total. Phone calls. Boomers are at 46%. Everyone else is 30 or below. Email was terrible. No one wants your email. Only 12% of Gen Z want an email. Only 19% of millennials. Only 9% of Gen X. Only 11% of boomers. So this is an interesting graph here because you do see an increase in the millennial generation saying just email me, which I have some millennials on my team that are very much like they love to get the emails. But then you also see the older generation saying, nah, I don't want that. And you see the youngest generation saying, nah, I don't want the email. So 13% total. Don't email your clients ever. And then written communication. That's what?
I think it's like all
handwritten
written.
Note. Oh,
no. Like,
okay.
yeah.
All right. I see it added
So
them
between
up.
text messaging and email, they
So what
prefer
is
that
the-
over verbal.
Written communication. Okay. So they don't want a phone call. Right? Am I reading that right?
Kind of.
No phone call. No phone call or no in person. Janice Fleming. Thank you, Janice. Says, I only look for your emails, Ray. Oh. Elizabeth Nightingale says, when you say just email me, is that the new way of saying buzz off? Yeah, I think that's the polite way.
I'll check this when I get around to it kind of thing.
Yeah. Oftentimes I'll tell, especially vendors, like let's say somebody has a new marketing tool or thing, and they're like, hey, can we set up a 30-minute call? I don't have time for a 30-minute call. So I say, just package whatever you want to sell me, put it in an email, send it to me. I earmark it. I put it in a tickler file to review when I have time. And when I have time, I go and review it. If I want your thing, I'll contact you. If I don't want your thing, this is the last you'll hear from me. It's very simple. And people are like, no, I need to get you on the phone to show you. Like, you really don't. I am pretty tech savvy. I can tell if you send me screenshots about what this is going to be. Courtney says a lot of millennial clients. What does LLTEKK mean? Is that a...
Tell me.
Oh, a lot of millennial clients tell me their email is where they send spam, and I have to tell them when I'm emailing them for signatures. Yeah. A lot. I think... Is this just me? I have an email account that sounds like a legit account that's totally a spam account. And then I have my actual email. So my actual email, hardly anything is ever sent to it because only a few people know about it. So you might want to say, what is your actual email?
Do I have your actual email, Ray?
All right. So the next article...
Fine. I'll never email you.
All right. So this is a confession. Is my confession. Cindy says she has it. She thinks she has it.
Unbelievable.
All right. So this is a little bit of a confession. So the email that I give to people is an email that I never check.
Okay.
My assistant checks it and I pay her to check it. And so she goes through and she tells me what's important and she will text me the important emails, and then I'll tell her to respond to them or what to say, and that's it. I very rarely, sometimes on the weekend I will, just to clear it out if I know there's a lot going on, or if I've got an offer or something like that, or if somebody says I've emailed you something that's important, I'll check it. Otherwise, my assistant gets it all. And what was really cool about her that I love, Teresa Benny says, ha ha ha, she's the gatekeeper. Yeah, pretty much. What I really love about her, though, is when I first hired her, I told her that she was walking into chaos, and she just embraced it. And we were getting so many emails. She started to unsubscribe me from the stuff that I didn't want. And then she began to read my old emails that I had previously sent and started to respond to people based on how I would respond to similar emails. It was so great.
That's exactly what you need.
It is what I needed.
Like every agent should probably get an assistant who's able to do this for them.
Just check the email, man. Two company announcements along with the EXP announcement that we just talked about with Tim. Pacific Sotheby's International Realty is now powered by Rechat. So this is a third-party service that does AI tools and such that they're going to be using in conjunction with their agents. I'm not very familiar with Rechat. Are you by chance?
Never heard of it before this moment.
It markets itself as an experience management platform for its library tools that assist agents from lead initiation. Why can't I read that word? Through deal completion, the entire transaction experience. According to the announcement Friday, Pacific Sotheby's advisors will access comprehensive suite of features, including automated marketing campaigns, advanced CRM capabilities, and powerful email communications. So I think what you're seeing here is brokerages that don't have the tech inside that company are starting to partner with the third-party companies to get something to offer their agents. With Rechat's advanced platform, our advisors will be better equipped to connect with clients, market luxury properties effectively, manage their workflows seamlessly. I don't think Rechat is exclusive to them, though. Yeah. And this is one of the things that I ran into as an independent when I was an independent brokerage. I could get Canva and offer it to my agents and pay for their pro, or I could use SkySlope, and integrate that into my system. But who I couldn't beat were companies that were making that tech on their own that had, really amazing technology integrated into how they operate. So I don't know how this is going to be integrated into their backend. Mm-hmm. But it will be interesting to see if it stems the tide for some of the larger brokerages that have been around for a long time and don't necessarily have the tech advances of newer brokerages. So we shall see. That being said, Real made a whole bunch of announcements too. The press releases for these are coming later. So I only know about these announcements because I was at the conference last week. But a couple of the announcements is that they announced some progress in Real Wallet. Real Wallet will be able to look into the stock account for the real estate agent and tell them what stock would be available to withdraw and what stock is there and has to vest. It can also look at the incoming rev share and tell the agent, like, here's how much money you have pending. It's really cool. They also have a line of credit built into that. They've partnered with a bank. They are still not a bank. That was an early misconception on it. Mm-hmm. So they have partnered with a bank to offer a line of credit, and people will be able to get a real credit card, basically, which is kind of cool. So
yeah, and the line of credit's based off of the money that you have coming in, which as independent contractors, that can be kind of difficult sometimes to justify to banks or different places, because it's like, well, this is what I wrote off. This is what I said I made, but then this is what I actually made. So with it being all in-house, they know how many sales you're doing and kind of what your track record is, and they can give you credit.
They can see the numbers. Mm-hmm. They also have had for a long time this ability for you to withdraw, I guess like a fast cash type early check. I've always told people don't do it. Just don't do it. But they've had the opportunity for that. I have never had that opportunity because they look at our market and the number of cancellations and they're like, yeah, it's not available where you are.
Oh, so you never got those early commission checks. Interesting.
No, never did it. And I was always afraid to do it anyway, because in Arkansas, and it may be because of this rule, but somebody can walk away a day before closing.
Oh.
So it's not sure. You're not sure.
But do they lose their earnest money?
If they put any down.
If they put any down?
Yeah.
Do people not put earnest money down?
You should Google, do I have to put earnest money down to purchase a home in Arkansas, and see what comes up? Because it's actually our website. It is one of the most common questions people ask. And the answer is no. Not right now. I make the argument they may want to because it'll limit how much the seller would be able to sue you for if you did walk away for no reason. But no, you don't have to put down anything here.
That's wild.
Cindy said EXP is opening in Turkey. That's interesting. Global. EXP Global. Okay. Teresa, she's a gatekeeper. Yes, my assistant is definitely the guy.
You did already share that.
All right. Sorry, I was just making sure I got everyone's comment. All right, we have 4 or 5 news articles I'm going to breeze through fairly quickly because I know you got to go too. This one is about pending home sales. Rising mortgage rates haven't yet slowed pending sales. Pending home sales rose 3.2% year over year during the last 4 weeks, during the 4 weeks ending October 13th. It's the biggest increase in 3 years. On a local level, pending sales are up 34 to 50. 34 of the 50 most populous U.S. metros, with the biggest increase in California and Portland, Oregon. Hey, that's up near you.
Yeah.
Well, closer to you than me.
Yes. It's like 2 hours away.
Sales have improved over the last month because mortgage rates fell to a 2-year low. Did you see this increase in pending sales in your area due to the rates?
That's what I wanted to go look up. So we're looking at pending sales.
Yeah.
So what we've seen is in our entire MLS, it's up. That doesn't feel right. Is it up 18.4%?
In your area?
That doesn't feel well. This is for the our entire MLS. And so the Northwest MLS covers everything. But I could go to my county.
Redfin's all over it. Pending sales rose 2.5%. Home sales plummeted across Florida, of course, because the hurricane, maybe?
Probably because of the hurricane. So yeah, it shows for King County, so that's the Seattle area, it's up 23.7%.
Wow.
That feels
existing home sales fall to the lowest level since the start of the pandy. That's interesting. That's interesting how pending home sales can be up, but existing home sales are down. So I guess a lot of it's new construction. Mm-hmm. 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 All right. If you had to guess, you may have read this. Did you read the rundown yet?
No, I got this.
Okay. If you had to guess, I know it was a wild day. If you had to guess, okay, how many renters are there for every home sale? How many renters are there for every home sale?
I would say like 40, 50. I don't know.
You're close, actually.
Oh.
That would be an incredibly high number, 40, 50. I mean, unrealistically high. Elizabeth Nightingale says too many. I'm taking guesses here.
Okay, is it 10?
In the comments. You say 10.
Or no, you said I was close with 40 or 50.
Oh, you're close with 40 or 50. Drop in the comments. Pause it if you're watching replay. Pause it. Let me know. Bam, bam, bam. Elizabeth Nightingale got it. 30. 30 renters for every one home sale. You can't guess twice. Then she guessed 25. So now I'm going to say you're 5 off. Because delay. Freddie Mac's latest market outlook report highlights the challenges faced by first-time home buyers. For one, the number of homes for sale for each renter household in the U.S. remains near historic lows. In fact, according to Freddie Mac's report, there are currently 30 renters per one home for sale in the U.S. That's up from 10 renters per home in 2006. Wow. Well, that's significant, I would say. But 2006, there was a ton of supply. A lot of people were buying a lot of houses. But due to that supply, that's what caused the crash in 07 and 08. So, and that's why a tax credit at the time to help people purchase a home was good, because there was so much supply on the market. Here in a situation where there's not enough supply, so a tax credit for people to purchase a home is actually very bad, because that's going to increase the purchase price of all the homes that are sitting on the market. And so even if you don't qualify for the credit, you're still going to be paying more for the house than you would normally. So it's up 10%. Sorry. It's up. What is that?
3 times?
300%.
300%.
It's up 300% since 2006. Let's see. Renters' aspirations and barriers to home ownership. 65% cite the cost of the down payment as their primary roadblock. 52% say home prices are too high. And 39% struggle with their credit scores. Interesting.
I know in Washington, we have a ton of down payment assistance programs and programs to help with closing costs. I know you don't have that everywhere, but I think for us, the main issue is housing prices are too high, but we also just don't have enough houses available for people to buy, even if they could afford them.
Which is why housing prices are going to continue to go up.
Mm-hmm.
I didn't catch all the math on it, but maybe it was at the RISE conference. They were talking about the math of if you were thinking about buying a house now and you decided not to buy a house now, but instead to wait until, the rates go down or until you have a little bit more money to down payment so that you don't have to pay the PMI. They did the math on what that cost. Maybe it was just an article I was reading.
No, I think
Was it something that was there?
Neil. He was one of our speakers. Yeah. He had like a little blurb of a video he did, and he was showing the math of it, and it was crazy because it was like $1 million or something, or some maybe not $1 million, but it was like some crazy number.
Yeah. He basically said you should buy it now anyway. Pay the PMI because if you waited and homes continue to increase, then you're going to be paying more in the future. But home prices grew 0.5%. So we're still seeing an increase in home prices, primarily just because there's not enough for people to buy. So this is the fastest pace since April. Wow. Here's the Redfin Home Price Index. And then they have the, what's it called? The CoreLogic. CoreLogic is what we all used to follow. So here's the CoreLogic chart overlaid. The red chart is the Redfin, and the blue chart is the CoreLogic. And for the most part, it tracks. It's a little bit more wild than the CoreLogic index in its ups and downs. Actually, if you look, it goes down less than CoreLogic and up more. That's interesting. Like in the Redfin Home Price Index in, March? It was up 0.71%, but the CoreLogic was only up 0.1%. So that's kind of an interesting juxtaposition. We'll see what happens and who's more accurate over time. Mm-hmm. Currently, the CoreLogic is saying, oh man, it's cutting it off, so I can't see the exact number. So this is first world problems. Here. All right, it's saying 0.2%, while Redfin is saying 0.48%. Scap, who is a data guy and appraiser, says CoreLogic is garbage and says Redfin is garbage, but also garbage. There's been a lot of garbage in the news lately.
He did say he meant better, but garbage. Yeah, it's all garbage.
Oh, I see it now. I meant better, but garbage. That's so funny. Okay, and then I think this is the last news article that we have coming up. Yeah. All right. All of this leads to something that's blatantly obvious, I think. And it's the lowest home ownership rate for younger households. It's no secret that things are really high right now and stuff's hard to afford. You have fewer homes available per rental, so first-time home buyers are less likely to purchase. And you can see that in Q2 of 2004 compared to Q2 of 2003, on the less than 35 home ownership age of householder was 37.4%. In 2023, it was 38.5. So there is a huge age gap. 65 and older, of course, are sitting at 78%, almost 79%. But it is harder than ever for first-time home buyers and young home buyers to purchase a home due to affordability. And it goes back to that article that we were just talking about, how most of them say that they can't do it because 65% cite cost of down payment. 52% says the price is too high. 39% struggle with their credit scores. I know they're buying homes later. I know that people are settling down later. It's not the old days like it used to be. Just the society has changed. I wouldn't even say it's changing. I would say it has changed, and people are settling down later. They're worrying about purchasing a home later. People want to continue to be mobile until they know what they're going to do. We had the whole COVID stuff that people are still probably thinking about, like, well, should I really buy here, or is my company going to call me back into the office? So I think there's just still a lot of uncertainty in the marketplace, in addition to them not being able to just afford the basic down payment. I wonder if more down payment assistance programs will come out in order to help this. I think the answer long term is supply side. We have to have supply side help. If we don't get supply side help, then we're going to continue to see this go up, up, and away for years to come. All of the YouTubers out there that are shouting about the housing market crash and all that, it's bollocks. There is no way that we're going to crash right now because there is no supply. And that doesn't lead to a crash. Instead, that leads to higher home prices for longer. So if you stay out of the market, the longer you stay out of the market, the more you inhibit yourself from being able to purchase, or inhibit yourself from getting the benefit of the appreciation over time. So figure out a way to buy a property that you know will go up over time and at least get in the game. Then you can cash that out, upgrade for something later. Elizabeth Nightingale says, every time you preach supply side fixes, I yell out loud. Yes, you were so right. Thank you.
Yeah. We started the conversation.
Is anybody else?
What's up, Jack?
Sorry.
No, come on in, Jack.
Hey, is anybody else seeing increase in inventory and days on the market? Because I know I am.
Oh, you are finally. Isn't that relatively new for you?
It is. It certainly is. We've got 90 days on the market right now with 20 listings in my small town, but it's a bit of a trend in the area for sure.
Interesting. 90 days on market. Is that long? What was that compared to in your area?
Compared to 5.
Oh, okay. Yeah, that's long then.
Yeah.
Mm-hmm.
Yeah. It is long, and there's a couple of outliers, and if you took the house with the most number of days on the market and the least number of days, you'd probably average out around 60, but that's still considerably longer than, don't expect to get an offer when you put your house on the market these days, at least in my market, because there are holes where there isn't demand anymore.
I think that is going to be a healthy thing, but something tells me that people are waiting a little bit to see what happens after the election. I know 1/4 of the buyers, that was the last study that came through, but I think there's other people that don't respond to these polls that are waiting to see what's going to happen. Elizabeth Nightingale says, Yep, we've gone up in inventory about 30% year to date.
I mean, we've had a lot of people move, whether it's to buy something or to rent something. A lot of people, more concentrated in my time in the business over the last 4 or 5 years, and people in my area usually stay in their houses for 10 or 15 or 20 years.
Interesting.
How often are people going to move to keep this demand as strong as it has been? I think it's a short-lived thing, and I'd like to think that we're going to get back into a more balanced market, maybe even a little bit more of a buyer's market at some point. But I think the spring will be the telltale on that. Once we get through the election, once we get through the holidays, and around here, it all depends on the weather when the spring market shows up.
I'm gonna go out on a limb. Well, let me get to Scap's comment. He says FHA and Fannie raised appraisal waiver guidelines for 80% to 90%. What can go wrong? Now you can buy a house with a waiver and overpay more. Loan to value goes from 80% to 97%, and now you will get the property data collector coming to your home, and they don't know stuff. What are you talking about, Scap? Are you on? Scap. What does this mean? Break it down in layman's terms and pretend that Matt LaMarche is trying to figure it out.
I'll speak to a Matt LaMarche terms. No, I'm kidding. So FHFA and Fannie and Freddie and everybody came out saying they're going to now do these waivers, meaning 8% to 90%, basically, if you put 20% or 10% down, now you can get eligible for a waiver. So you don't have to actually get a full appraisal on your home. You can get a waiver or one of their algorithms or something like that. A lot of these include property data collectors, not real appraisers. They might represent themselves as appraisers, but they're not. Basically, they're just collecting the data on the home when they come out there, submitting it to maybe an appraiser or submitting it to Fannie and Freddie and saying, here's all the information, and then they base that loan based upon that. So they're not doing an in-depth appraisal inspection. You're not getting a true value. It's almost like an algorithm, just kind of like Zillow and everything else. But Fannie and Freddie have come out and said, oh, well, we're going to just keep doing these algorithms and, using what we have to make this less expensive on the consumer, basically saying, appraisals cost too much. Well, that's obviously a problem with AMCs and everything. And I've got a lot of data I could share with you on AMCs and how they overcharge your borrowers by like 80% and,
Ouch.
or, anywhere between 50 to 80%, if not more, and then pay the appraiser a lot less. And this is where they're pocketing the money. So they're creating more problems. They're just making this saying, hey, well, we can do appraisal waivers based upon your loan to value. And if everything works out and your down payment, okay, great, we can give you an appraisal waiver. But here's the problem. Are they actually giving your borrowers or giving anybody the actual, like saying to them, hey, you can get a full appraisal and that might be more in depth, or hey, you can just skip it because you're putting down so much money and we're good with this and we can just loan you the money on this. And here you go. We'll give you a waiver on it and no checks and balances are in place on this. So that's kind of where they're going with this in 2025. And it could create a big problem for your borrowers. They could be overpaying by a lot. They could be overpaying by a little. But you're now relying upon these algorithms that have never been tested, anywhere outside of Fannie Mae or Freddie Mac. They're just simply saying, hey, our algorithm is great because of all this data we got, but nothing's been tested outside of it to prove that these things work. So you have to be aware of who's coming to your house now. If this is going to increase, what's going to happen is that you're going to get a lot more of these waivers or these people coming out, we call them property data collectors, that may represent themselves as an appraiser. So you might be thinking, oh, the lender ordered an appraisal, but no, they did. They ordered a property data collector to go out there who's unlicensed, no background checks, no nothing out there, coming to your borrowers or coming to your client's house, collecting data, and maybe they don't get it right. Maybe they get it right. They're not licensed. So a lot of issues are being discussed with this new thing that they're going to raise this. And I'm sorry, as an appraiser, I feel like this is a very much, not needed service, but it's not transparent to your clients. And everybody can be hurt in this transaction going forward.
Well, it's interesting. The property data collectors, they're going to collect data about that home, but they don't have it on all of the other homes that they're comparing, presumably. Mm-hmm. And these property data collectors, they're going to pay them $50 to $75 per property that they collect the data on. And I know that because right now they already have a network of these individuals who do something called broker price opinions. And what they're going to do, Scap, is they're going to use the existing networks of the agents that are doing broker price opinions for $40 and $50 a pop. And they're going to send it out there. Those agents are going to be the ones collecting the data. Then they're going to upload that data and go with that. That's really interesting because I've always viewed an appraisal almost like a backstop, like, hey, just in case we get a little crazy here, at least we got an appraisal. But my numbers look good. I think this looks good on my end. But I know there are agents out there that are a bit disingenuous, that are not doing the homework that I do for my clients whenever we input an offer. And those are the clients that I'm worried about. But that also offers another opportunity for real estate agents like me to have a great differentiator in that, hey, we do a comparative market analysis for any property that you were thinking about.
Well, look, Ray, I mean, appraisers, we're appraisers. We're supposed to be unbiased. We're not representing clients. We're not supposed to try and, get the maximum dollar amount and everything like that. Yeah, a lot of people think of us as somebody that hinders the process. Good appraisers actually do their job the right way to make sure, hey, this is what the value of the home is, and you could be overpaying. If you want to overpay or you want to pay more, go ahead. That's up to you as the buyer to pay whatever you want for that property. We're just trying to tell the lender, hey, this is what this collateral is worth based upon the facts and data out there. Now, you start implementing more of these waivers, which is what they did during COVID.
Yeah.
And you start implementing more of these out there. How are these buyers and sellers, or at least the buyers, how are they supposed to be informed about what they're putting their money into? And maybe there's more issues that a property data collector is not experienced in collecting that data and misses things or doesn't understand things that an actual appraiser would do. That could actually, be very detrimental to that purchase of that property that a normal appraiser would actually catch or see out there. And these people are not held by any standards or any board standards or any state standards. So they're not liable for anything. So who are you going to sue when the whole thing goes down and something goes bad? Who are you going to sue? I mean, in my honest opinion, they're probably going to go after the agent and the mortgage brokers, but that's what Fannie Mae and them are doing.
They'll probably, they'll go after anybody they can. But in the words of the infamous Gloria Estefan, the algorithm is going to get you. And so I would just issue a little caution there. Now, so let me make a prediction based on everything we've talked about today. And Becca, feel free to make a prediction. Ooh. I predict that if Trump wins, the housing market is going to look like a steam engine getting started this holiday. It is not going to look like a race car. It's not going to look like a new locomotive just starting to fly immediately. But I think you will start to see it like really revving up through the holidays. And I think you're going to see more people coming back to the market. I think you're going to see more buyers entering the market. I think you'll see more homes being listed. And I think that is, I think that's how most people are feeling. This is my prediction. I'm not saying if it's good or bad. I'm not saying whoever, but if Trump wins, I think you're going to see that. I think if Kamala wins, you're going to see a pause, because people are going to either try to wait for this $25,000 credit to see if it actually works, or they're going to be unsure of what things are going to come, because so far from the policies she's put out, it seems to be a bit contradictory with when she says one thing and then she says another thing, or she said something in the past and now she says something new. So I think people are going to like wait and see, who is this person? I think everybody pretty much knows who Trump is after the first 4 years. You can kind of bet on what he's going to do. You know how that's going to work. And so I think people are more comfortable making a decision with that surety. Whereas with a new president, even though she's been VP, I don't think people know exactly where she stands on stuff. So that's my prediction. If she wins, it's going to be a real cold winter for real estate agents. I think it's going to be very slow to move forward. I think if Trump wins, I think you're going to see stuff start to cook. What do you think?
I don't want to make a prediction either way on that, what's going to happen with the real estate market as far as people coming in. But I do think that if Kamala wins, you will see more of an exodus from blue states into red states. And maybe if Trump wins, you'll see more of an exodus from the red states into blue states. That's what I would see happening, is people who are like, you know what, I'm tired of the politics of this one. I want to go to the one that's more like where I'm leaning. And I think we're going to continue to see more of that division happening.
That's very interesting. I'll take it. Great prediction.
I don't see the presidential election going one way or the other, making somebody change their mind as to whether they're going to buy their house or not.
So Jack thinks there's going to be no difference in what we are. It's just going to be a benign impact. Okay.
It's a flash in the pan event that versus something that a lot of people have been working on for years.
Interesting.
So.
All right.
As long as they don't lose their jobs. That's all.
Well, didn't the jobs report come out? It was good again. So there's just more and more people getting jobs now.
But as we're talking about election stuff that's coming up, we're talking about affordability. We're talking about inventory. We're talking about people not being able to get into the markets. because we started off talking about regulation with
Mhm.
commissions and real estate agents. So let's end with talking about regulation. I think the best way for us to get more supply into our market is to decrease some of the housing regulations that we
Yeah.
have so that we can build more homes and build different types of homes so that we can have more accessible options that aren't just single family homes, but having other like multifamily or other, shared spaces that are more affordable for these younger potential home buyers to be able to get into the market. So they don't have to spend, $500,000, $600,000 on a house.
Yeah. Good take.
So vote for those things in your local markets.
Vote for those things. Thank you for joining me today, Rebecca.
Thanks for having me on.
Would you tell everyone how to find you?
So you can find me mainly on Instagram at Homes with Becca, and it's HOMESWITHBEKAH. I spell my name the correct way, REBEKAH. No CCA over here. The correct way. And you can also find me on 2 podcasts, The Real Random
That's
one
right.
with Ray and Rick, and then also another one I do with Amber Haley out of Hawaii. It's called 2 Girls in the Market. So check us out on either of those.
It's hilarious. Good show. Well, thanks everyone for joining us. I'm Ray. You can find me at Ray Zorback, RAYZORBACK. Becca, thanks so much for giving me so much of your day today. Thanks everybody for jumping in the comments and getting on Clubhouse. And I will see y'all next week after Election Tuesday. So we'll have special election coverage next Wednesday.